Good evening and welcome to the Australian Stock Market Show. With your lords finding strong buyers late last week, is the market now ready for a new bullish run to test the 8600 level? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at the major world currencies, and for our main topic in tonight's show, we get into the best gold and metal stocks to buy in 2025. First up, we'll share our hot stock tip for the week. So sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the most important questions around the market. Tonight we're excited to share our thoughts on some great stocks like AGL Energy, Northern Star Resources, Genesis Minerals, the major world currencies and more. So get comfortable as we'll get in those soon. I'm Phil Tortevsky and I'm your host for tonight. And joining me are two of Wealth Within's highly experienced analysts and professional traders, Janine Cox and Bedro Banyalis. And together we're Australia's most trusted stock market educators. Good evening, everyone. How are we?
Good evening. Well done. Just made it over the Banyalis.
Bedro, yes. That's okay. Close enough, right?
I had one slip up. Come on, it's early.
At least it wasn't Pedro Pony.
That's it. Yeah. All right. Cowboy.
Yes, you were famous for Pepper, but let's get to
anyway,
today's
yes.
show. How are we all?
Fantastic, thank you. And looking forward to this topic, all about gold, which is exciting.
Yes, gold and yourself.
And can I say happy Australia Day to everybody for Sunday, and happy Chinese New Year to all our Chinese viewers. Gong Xi Fa Cai. Hopefully I said that right. And yes, for that, apparently we get some red envelopes if we say that. So you better learn how to say that pretty quick.
I've learned something new today. Well done, Pedro. All right, well, tonight we're going to do it in Australian or English, sorry. But anyway, tonight, as mentioned, we get into the major world currencies. But first, let's take a look at this week's hot stock tip. Pedro, mate, after that, you've got to pick something.
Okay. I promise it's from Australia. Okay, so today, the hot stock for tonight is AMP Limited, ticker code AMP. So let's get straight into it. On your screen right now is market index. We can see that it's a stock in the financial services.
Actually, we can finish now. Do you know why?
Why?
Because it's already gone up 83%.
There you go. Yeah, show's over. Well, if you would have invested, back then. But I think it's got a little bit more to go. Let me get to the charts at least.
Okay, sorry.
So it's a stock in the financial services. It is, 2.3 billion. It's nothing to scoff at. It's got a 2.27% dividend yield, so not much for those wanting a bit of income. P ratio is a little bit high, but it happens just a little bit, just a tad. But
some
with these
spec
growth
stocks have PE ratios around that level. So what's going on there?
Well, yeah. Well, we'll have to look at the charts. we'll eventually get there, hopefully. But I'll just quickly mention that it is in the 116, so it's not so bad, Janine.
Okay.
I think that we can.
That's pretty good.
It's pretty good.
Mm-hmm. So just outside the top 100.
Just outside the top 100. Mm-hmm. So in that, let's get straight onto the chart and see what's going on. So on your screen right now is AMP. You can see that we've got the monthly chart on the left and the weekly chart on the right. And I've marked this sideways consolidation pattern that it's just come out of. It's been in that pattern since 2021. So back then, if you invested a little bit too early, and this is what we talk about, don't get into these stocks too early when they're falling, because you could be stuck in this sideways range. But now I like that it's actually come out of that range, and it's making some interesting patterns here on the weekly chart. So it has these periods of consolidation where it just trends sideways and comes out of the pattern. Trends sideways, comes out. Trends sideways and comes out. And I've marked these trends where it's going a little bit more vertical now. And one final thing that I wanted to point out is that it's actually moving in 40-cent increments. So we can see it found support at 90 cents. Then we've got $1.30 and now $1.70, which was a previous level of resistance and support. So I'm thinking that the next level strong resistance level is going to be that $2.10, and we've just popped our head above that.
Gee, your training worked, didn't it?
It did. Well, I've got two very good mentors.
But I mean, can I get your thoughts on this? Because what's really exciting about that stock when you look at the chart is it seems like the volatility has changed on this one. Obviously, a much more volatile stock, probably expected when a stock is in free fall or trying to find its feet. Now it's in such a uniform uptrend. I mean, does that play into that thinking potentially in terms of time frame? How are you going to play this one? Is it more of a long-term play than short-term?
That's a great point, because the personality does seem like it has changed, and making these continuation patterns, as we call them, isn't something that we've seen for a very long time. And it has been falling for a long time. Really, it just kind of trends sideways usually. We're looking back at after the GFC low there on 2009, and it's really done nothing over this period. You could have traded this stock, but as a buy and hold, not very good. So it looks like it's changing. It could be a medium to long-term play, definitely.
Fantastic. All right. Well, that is it for our weekly hot stock tweet. Now, shortly, we will get into our topic for tonight. But before we do, right now, it is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers. So call now on 03 9290 9988, or you can text your question to the number on your screen. Now, the first caller into the show right now gets a free copy of Dale's book, Accelerate Your Wealth. I don't have the book on me at the moment, so we can blame production on that one. But pick up your phone right now and dial 03 9290 9988. Now, while you do that, we will give you our thoughts on the major world currencies. So let's get into it.
On your screen right now is a watch list of the major world currencies. Let's take a look at that. And the Aussie dollar versus the US dollar, 0.96% up. Actually, this is deceiving, isn't it? Because the highest gains there are for the New Zealand dollar versus the US dollar, up 1.12. Sorry, the Japanese yen up 1.26 versus the US dollar. But I think that when we set this up, you thought, let's put the Aussie because it's the most important one.
That's right. We want to talk about that one first, right? That's the one that matters.
Almost 1%, which is good to see for our currency. So we can see there, Australian dollar is trading at 0.6253. So if you're thinking about going away on holidays, maybe not just yet.
And what do you think? Do you think that's actually bottomed? I mean, it has had a staggering fall, hasn't it?
Hasn't it?
And, what are your thoughts on it moving forward?
Well, look, I think that our currency, they wanted the currency to get to 62 cents, and it has. So there's been a lot of talk about these levels where it's fallen to find support. So, that's given me a lot of confirmation to think that now we're coming off that, it should move up from here. But we know that, when our mining stocks are in a boom, that our dollar tends to do better, but it's currently looking at it and looking at the mining stocks, we can see there's still a bit of sideways activity there. So, but I'm expecting it to turn around and start moving up again. The Canadian dollar is actually down, so down 0.15% versus the US dollar, and the British pound is the other one that's moving in the opposite direction at 0.58% versus the US dollar. But what's really interesting, Phil, is how the US currency performed after Trump was elected. So initially there was a bit of volatility around that time, and the concern about inflation's obviously affected the US dollar, and we've seen it take off. But we're seeing it starting to settle down a bit now.
I mean, it's so interesting, that point you raised, because, it's very, or not, I shouldn't say very rare, but it is rare when you see such obvious catalysts drive a market. And I mean, on the 20th of...
Obvious? Do you think that was...
Well, if you look at the chart of the US dollar, which we will, on the 20th of January, the day President Trump got elected, there was a significant reversal in the US dollar, because that was the same day that President Trump didn't go on with his tariff promise.
True.
And so, clearly the market is so honed in on what the president is doing, or what the US is doing in terms of dictating, inflows and outflows into that US dollar. So to me, it's very crystal clear. Follow the president and you'll have an idea on which way to be investing.
Is that the way you want to set the strategy?
Well, of course, there's more to it than that. But I mean, the point is, it's such an important driver right now for particularly the US dollar and gold as it will follow. But I mean, you're going to get into the charts right now.
Well, let's just take a look at the charts so we can understand where things are going. But I mean, it has been quite volatile. We can see here, this is the monthly chart of the DXY, which is the US dollar index, we've seen this nice consolidation. Now, to a trader who wasn't thinking about whether this was a currency or not, as we've said before, it doesn't make any difference whether it's a currency, commodity, or whether it's a stock. Once you see a sort of consolidation like this and nice support, there would have been a lot of traders who were in the know looking for the reversal around these support levels, and then we've seen 3-4 months up on the US dollar index, which would tend to make you think that there's a potential for a bit of a slowdown, particularly after we've seen a break out of this rise resistance level and a rise out of that. So it looks like it's trying to find support there at around 106 and has come up a little bit higher, but there's always a potential for a drop below that level before we see another move up.
Yeah, it's very interesting. I mean, with a break like that, it's again another obvious play, given all currencies are matched with the US dollar, you know, buy the dollar and short everything else, right? But anyway, that's probably a topic for another week. But that is our thoughts on the major world currencies. Now, before we get into the first email, remember to get your questions answered live on air. You'll need to text or call into the show. You can also send your questions to info@wealthwithin.com.au and we will answer them in next week's show. Now, let's get into our first question. Jimmy asks, I am wondering if you can give me some pointers on placing trades on the open or selling on the open for any given day. For example, a stock has signalled an entry on Friday's close and you want to buy on Monday's open, but with brokers like Westpac and CBA, at market trades can only be placed between the ASX opening hours of 10 a.m. to 4 p.m. But the website can lag the opening time a little, causing you to miss the opening price. So does this mean that the only option is a conditional order and setting a price range so that if it trades between this range, you are more likely to get the opening price? Now, I mean, it's a little bit of a detailed question, so maybe break it down for us a bit, Janine. But what he's basically getting at is waiting for the close on Friday and then trying to get that Monday's open with a bit of a lag in the price and the movement around what we get on the open, which is causing the issue here.
I totally get the question, and it's a really good question, and we haven't had one like this for a while, but it's really important because if you're waiting for your entry to trigger and it happens on a Friday, it's then how do I make sure I get my trade on? Do I ring the boss and say, sorry, one of my trades has just triggered, I'm not coming in Monday morning, so I've got to make sure I get my trade on? No, you're not going to do that. Maybe get the app could be a good way of getting in there so that you can actually be able to get it at the time when you need to. But the other issue is, why not think outside the box? Why wait till Monday when you can trade it Friday? Your trade is not going to move the market. So if the stock was actually looking like it was going to trade above that level and trigger your entry, it's probably going to stay there. Unless you're trading penny dreadfuls, and that could be a totally different story. So it's sort of stock specific, but in most cases, if a stock you're really close to the end of the day and you can actually get your trade on, then you're probably better off to do it then. Otherwise, why worry about getting the exact price on Monday's open? You know, you don't need to be, that tight about it. If you've got good rules and it's a good liquid stock, it's not going to jump around too much. And even if it does go up 1% or 2%, does that really matter?
But I mean, he did say in the email, putting on a conditional order prior to the market and, setting that order potentially above, the match price, that will work as well, won't it?
That's right, yeah.
Well, yeah, it definitely would. So if he puts a conditional order, say at, $10 and it's trading at $8, well, he's going to get the best price underneath that $10.
Yes.
And the broker will automatically do that.
Yeah, but the challenge is in setting the limit price, say you set it a fair way above that, where do you set it exactly? That's always the challenge, isn't it? Because and it depends on the stock's volatility.
Could gap up.
You set it too high, you might not get the match price and you might end up getting the actual price you asked for.
Exactly.
It might not be what you actually wanted. So that's where you've got to be
definitely.
very strategic about that.
That's a fantastic point.
Actually, a rule that you could implement is not actually to trade the first half an hour on the Monday as well, because it seems to be a very volatile period. So think about that as well.
Some great points there. All right. Well, our next is an email from David, who's been watching Nanosonics closely. It has had a nice rise from February 2024 when it tested a support level from December 2018 and has had a recent strong move up on the weekly chart. I anticipate some resistance around $4.15 and would be keen for any further insights. All right, Pedro, Nanosonics.
Wow.
How are we looking?
Yeah. So, great pick, I think, and great analysis. I think that I do agree with that previous support level back in 2018, acting as a support level recently in 2024. So let's just get straight into the weekly chart and have a look at that resistance level at $4. Well, I'd like to know exactly what constitute that resistance at $4. It could be some previous support and resistance levels there that he's talking about. But I do like the fact that it tested that level multiple times and then has actually traded up, come back down to try to retest that level, but it didn't actually make it all the way down, and now it's gone up. So that's looking quite nice. It's actually broken above this previous high back in September as well. It is trading down a little bit, so it's a little bit of a wait and see for me, would be. I'd need a little bit more confirmation. Maybe until it gets above that $4 level, then it could be looking better.
Well, that was the question I was about to pose, and that was the question in the email. Was it, do you wait above $4, and what do you want to see above $4? Is it just a break above $4, or are you happy to take the trade at these levels?
Yeah, it really depends on the risk profile. Ideally, we'd want it all. We'd want to see a break above that $4 level, coming back and retest that $4 level, and then take off again. But, it is a market. You're never going to get exactly what you like. So, you could actually take a trade as soon as it pops above that level, but that's not going to be the only thing that you're looking at. You're going to be looking at the movement of the bars.
But how hard and fast is that $4 level? Like, we all know that these levels are grey. It can be a zone or a range. And so therefore, you're just trying to draw a line in the sand and say once it gets above that, but it could be 380. That's the important level. And then you've waited for it to get above 4, retest it, and maybe it doesn't retest it and you've missed it, sort of thing. That's a challenge, isn't it?
Pedro's made an important point, because it's about how is it doing that? What's the relationship between the buyer and the seller on that move to 4 or around 4? Because if you're seeing a really nice setup under 4, just under 4, but the sellers have had their go at it and the buyers are looking much stronger, then maybe it's worth even having a look there.
Underneath.
You need to look at the structure of the actual trend itself.
Yeah, well, I think it's worth having a look at the history too, and just seeing what it's done in the past, because it's not uncommon for it to have these big pullbacks and then to take off like that. Now, in this case, it didn't even slow down or stop, it just kept going. So, that's one thought.
Very
and
similar
also,
price movement there.
Yeah, it's done a similar sort of thing here before as well. So, it's got legs that can get going.
Yeah. Plenty of volatility there. All right, great email. Well, Ria now writes in regarding Silex Systems. My analysis shows this stock responds well to 2 of my trading rules, and the stock is finding resistance at the $6.50 mark. I think that this could be a good trade, although I believe it's too early to enter a trade on this stock. Now, Janine, I'm going to go to you on this one. It could be a good trade, a bit early. What do you think?
G'day, Ree. That's what I think, first thing. Thanks so much. It's good to hear from you, and a really interesting stock as well. I used to look at this some time ago, so it's good to get a bit of an update on Silex. So I'm going to enjoy this one. Thanks for asking me to get involved in it. Looking at the chart on the monthly, we can see it's got significant volatility. So this is the sort of stock that you can make your money in a couple of months and then walk away from it, take a bit of a breather, and then come back later. If we go back to the weekly chart and have a look at what Ree's talking about with the resistance around here, it is huge. I think it's a really good line in the sand, and I actually love it when a stock takes off, finds resistance at a particular level and pulls back again. So you've got that retest of the level. Look, the third time it's retested, even closed up strongly on the bar and has pulled back. Let's just expand it out so we can really see that. So now it's pulled back again, but if it goes back through that level the next time, I think she's right. I think this thing could take off if it does that.
Yeah, well, that was the question. What's more important, resistance or trade setup, but the way the chart looks today?
I think everything in this case. It's like a combination of things. You can't look at it in isolation, which is what you're not doing. You are doing this right. You're looking at the whole lot together and saying, I want all of these things stacking up before I'm willing to put my money on it. So, congratulations on this one, Ree. It's a good one.
And it's an interesting point on resistance, because a lot of times people will see resistance get hit and think, okay, the stock's struggling there, but it might just be the exact opposite, where the stock is trying to gravitate towards a price level more and more. It's like what we're seeing with Silex. It's gravitating towards that 6 with lessening of sellers. So could be right on the money there. All right, well, that is it for our take on Silex Systems. Now time for our topic for tonight. The gold market was on fire in 2024, rising over 26.84%. But will this trend continue in 2025, or is it time to sell? Here's a quick recap of what happened to gold in previous years. Central banks around the world aggressively increased their gold reserves, acquiring roughly triple the amount of gold to pre-2022 levels. In fact, the total demand for gold reached the highest levels ever in Q2 2024. If this trend continues, the question has to be asked, how high can the price of gold go? Gold currently sits around $2,700 per ounce, and Bloomberg is projecting a very broad price range between $1,709 and $2,727. Goldman Sachs is forecasting a narrower range of $1,970 and $2,050 per ounce, which is an estimated drop of around 30% from current price levels. But why are they predicting this drop? Well, money is flowing back in the United States and the US dollar. And we can all guess why. Renewed confidence in a new golden age for the American economy, led by Donald Trump.
I'm excited to go, and we were discussing, and President Trump said, Masa, double down is not enough. Maybe, go for more, right?
That's what I'm going to ask him right now. Would you make it $200 billion instead of He can actually, believe it or not, he can actually afford to do that. Would you do that?
Well, my promise is 100, but he's now asking to do more. I think with your leadership, my partnership with you, with your support, I will try to make it happen.
That's good.
All right.
200. He'll make it happen. 200 billion investment.
He is a great negotiator.
That was a major Japanese bank CEO committing $100 billion into the American economy, and we're already seeing more investments like this. So with such bullish sentiment towards the US right now, will gold investments start to dry up? Or what could cause gold to boom? Fed rate cuts and geopolitical escalation are critical factors that need monitoring, but an additional factor that investors need to keep an eye on is the US debt. For every dollar the US earns, they owe $1.23 in debt. And by 2028, there will be a projected debt to GDP of 134%. So if you're looking to invest in gold in 2025, take note of this interesting trend. According to State Street Global Advisors, gold ETF investment by high net worth investors ranks only second to physical gold, outpacing the traditional number 2 option, which was gold stocks. So could gold ETFs be the right avenue for exposure to gold in your portfolio this year? Time now to get the experts' thoughts on this. Now, I'm going to go to you first, Janine. Let's start off with the elephant in the room, 30% prediction of a gold price fall by Goldman Sachs.
Disagree.
Right.
Do you want that?
I was hoping for something, yeah. I mean, because, it's interesting. You've got central banks on one hand hoarding gold to record levels, right? And then on the other hand, they're coming out and saying that they expect gold to fall 30% in 2025. That means that there's an overwhelming turn in the sentiment and confidence in, again, as we saw with Donald Trump's policies. I mean, is it really that changing?
In a boom, gold still goes up. So I just disagree with that completely, and I think they're trying to talk it down, in my view.
Well, you need some huge quantitative easing to be able to, bring the price of gold down and make, that flee to money again. But we are seeing, like we saw in the video, a lot of investment in America. 200 billion just from that SoftBank CEO.
Yes.
So it's likely that we are going to see more flock to the American dollar, but I don't think a 30% drop is going to happen.
Gold.
Yeah.
I mean, Pedro, our minds started going a bit crazy when we were thinking about conspiracy theories and all this sort of stuff, but we have to stick to what the charts say, and that's the really important thing here. It doesn't matter what Trump says or what anyone, Goldman Sachs, say. You've actually got to always be able to look at the chart, and now more than ever, there's going to be so many stories, so much propaganda coming up. There's always this way in a boom. You need to be educated on how to read a chart during this time to protect yourself, because you can easily get carried away with all the rhetoric that happens.
And it changes so quickly. So if you're not on top of price as it's unfolding, how are you even able to protect your risk first and foremost? That's the most important thing when investing. It's about protecting your risk and your position for that rainy day if on a whim they change policy like we've seen with the tariffs so
exactly.
far. But I mean, the next point I want to bring up, which is quite important, is we saw investment in gold ETFs overtaking traditional gold stock investment, which was second fiddle to physical gold. Now, you know, knowing the ETF space is booming and growing ever so large, how do you see that playing into, I guess, the price of gold or gold moving forward from that perspective?
Well, if more money is flowing into the ETFs and more big funds are going into the ETFs, I mean, the ETFs either investing in stock or physical gold or whatever. So the prices of those, if more money is flowing into the ETFs, will go up anyway. So if people want to invest in some of the stocks, then that's fine too. You don't have to follow the rest of the flock. However, you know, if it's all about the fund flow.
Yeah, and I would even argue the return. I mean, there's so much more return possibility with the gold stock versus the ETF. And you even mentioned an interesting point off air about some of these ETFs that are actually, you're able to transfer or recoup your funds in physical gold bullion.
Yeah, that's right. So they actually store the gold as you buy the ETF. They need to account for that. So it's kind of like the dollar standard was back in the 1960s, way back then. That as you buy the ETF, they need to store the equivalent value. So of course they have to purchase that from the market, bringing the price up as well. And with some of these that we're going to see later, you can actually transfer, like you said, your ownership of the ETF into physical gold.
Very interesting stuff and trends to watch out for. But let's now get into our best ETFs and gold stocks for 2025. This is going to be exciting, mate. Start us off.
Yeah, all right. So on your screen now is Global X Physical Gold. So this is a gold commodity ETF that seeks to track the return of gold. It invests directly in physical gold, offering investors exposure to the gold price. So this is one that we were talking about that actually has to keep physical gold. And what we've done is we've overlaid the price of the spot price of gold here in green. So you can see that it's tracking it quite well. Let's stick to the weekly chart here for a second. And it does a very good job at tracking it. It actually, Janine and I were having a look before at this period early on around the GFC, and it actually managed to iron out a little bit of that volatility that was around, And, around that time, you can see that it does track it well, but there's times that you can actually make more money out of owning this than the actual gold itself. So, it could be a good alternative if you don't have the storage space at your home to keep the physical gold and you just want to monetize off the growing value.
But the question really is, are we going to see it go higher? That's what everybody wants to know.
Yeah.
And the talk at the moment by the big funds is that it's going to be sold off. Well, who's going to be selling it off? The big funds, potentially. So, sometimes when they make these announcements, I just watch and continue to watch what they say, because back in December I saw an announcement that Goldman Sachs said it was going to go higher for 2025. So, the analysis says to me that we will have a higher gold price in 2025. We've got some experts on Talking Wealth TV that have talked about over 3,000. You want to listen to those if you haven't already. And, looking at the price of gold, and also we know that prices can double. So where there was a major correction, we had a look, if we just go back to the chart, physically, when we see, for example, with the ETF, if I can use that as an example, and it was hovering around $27. That was the last peak back here. This was in March 2020. Well, it's stocks and commodities will often double over time. It's just a known thing if you look through the history of the stock market. So that would bring us, if we calculated that out, up around 50 odd dollars. So, I wouldn't be surprised as part of this boom that we're having into the peak of the markets in 2026, 2027, that we see gold continue to rise and head towards that level.
But I mean,
the gold ETF.
Yes, and I mean, counting from 2020, to 2024, we've probably experienced some of the most volatile times in our world of recent history. So it kind of makes sense that it's had that kind of run. I think the question now becomes, are we going to see that over the next 4 or 5 years? And potentially the reasons these big banks are assuming a gold drop is that they think the saviour is going to bring world peace and stability to the world, right? and by the saviour, I mean Donald Trump.
Yeah. But look, I wouldn't use that term.
No, that's their term.
Yeah,
Yes.
but look, the gold price coming off, it is part of the ebbs and flows of gold and any stock or market. So we will see a pullback in the gold price at some point this year, but overall we're expecting higher gold prices over time. Same with silver. Other precious metals are also important, and there's further upside potential for those as well.
Oh yeah, especially with the rise in technology and the need for the materials
Absolutely.
to drive that. But do we have another ETF stock?
We have plenty more. All right, let's have a look. We've got here Van Eyck gold bullion. Have I missed one?
You have,
Okay.
jumping
Okay. Oh, gee, I like the other one better. Perth Mint Gold ETF. Okay, so that's an interesting one, isn't it? And that looks pretty much the same as the previous one that we looked at. So if they're actually replicating the price of gold really well, then you'd expect it to follow what the gold price is doing, which is what we're seeing. So this one, Perth Mint Gold, is an exchange-traded product, ETP, that allows investors to trade in gold via a stockbroking account as they would share on the ASX. PMG or PM Gold can be converted into holdings in a Perth Mint depository account. So that's what you were talking about
great,
before.
yeah. And many people are familiar with Perth Mint. It's right here in Western Australia.
But that's the second ETF now that is actually backed by something, if you will, physical. It's not just that pure synthetic, which some products do exist like that of that nature. So,
Yes.
I mean, is that important if you're looking to go into this space, into that ETF? Do you really need to read that fine print and go through and see what
absolutely.
is this ETF backed by? Because at some day, if the rainy day does happen and money starts pouring out of these ETFs, at least you've got the souls to know that, hey, real assets were bought with the money underneath this.
That's right. You want a reputable place as well, like the Perth Mint. That would be regulated by the government, backed by the government as well, and that they're physically holding those deposits. So definitely, you want to look for a reputable one, and it's good to know that they've got something to back up your money.
Fantastic.
All right.
Next one.
Okay, the one that I was talking about before, Van Eyck Gold Bullion ETF. Again, the same sort of thing. What's interesting to me is the range of some of these moves up. And if I can just grab, that's not the right one, just hang on a sec, I'll just grab the right tool. And you can see some of these ranges around 20% every time it gets going. We can see that sort of degree of rise, and therefore we might be thinking that there's a potential for it to do the same thing again if we go up higher. So where is that going to end up into the high, potentially around $47. So
$50 to round it off.
Be watching these over time, but in the short term, I think there could be the risk of short-term volatility because it's all about perception.
Yeah.
So if enough, big institutions are talking about it and they start a bit of a run on something, they can cause the volatility and for prices to drop.
Well, you just said a very important word there, volatility. And just by looking at that, I mean, those runs you show 20% moves in a matter of months, if not longer. When you compare that to gold stocks or gold mining stocks, you can see 20% moves, particularly for the ones that aren't that liquid, within a week or two.
Yeah, and I think the advantage that they've got with the AI trading now is that things will happen much faster. And obviously these AI protocols are actually fairly, well, some of them are going to be fixed, but some of them are actually modulating. So it'll be interesting to see how they perform through some of the volatility that we see over the next couple of years into the peak.
Yeah, fantastic. All right.
And after that, it's going to be even more interesting.
Oh, it's going to be way more interesting, yes. Do we have another stock?
Yes. So the next one is actually a
you've got Northern
miner.
Star up there.
Northern Star Resources. So this is actually one that is pulling the gold out of the ground, and we can see that it's actually traded above that previous all-time high. It's actually closed above it. It came down a little bit, but now it looks like it's tracking back up. I do like this one. It's looking quite bullish. Yep. It's looking like it doesn't want to fall from that high, and it's got this beautiful trend supporting it up here. So you could actually just apply a nice momentum line there and just trade it on the way up and just keep applying that. I don't mind this one medium to long term even.
Yep, agreed.
All right, next one.
All right, the next one is Evolution. And Evolution's been more volatile, actually. It really struggled to get going through this period here, through 2023 and even into 2024. But now we've seen it take off, a bit of a delayed reaction there. This is a stock that's probably better for a trader. It can be really volatile, but as you can see, you can have all these choppy ranges which really whip you in and out of the market. But now we're on a much better trend It's consolidating, breaking out. It'll probably consolidate again and then have another go. But it's not through its all-time high yet, so it hasn't even tested that yet.
Do you think it's on the way there? Do you think it will retest it?
Well, it's had 1, 2, 3, 4, 5. It's had enough months up now to have a pullback in price, I think. So it might go up for another month or so, but I think it will have a pullback before it gets there.
Yep. Eventually, though, it should retest that all-time high.
Well, you think that Evolution and Newcrest would go together. The charts are looking very similar there. But we don't. That's all we've got, isn't it? With the big two, we don't have NEM on this one. We've got smaller miners after that.
That's a point in itself. When you look at these gold players, I mean, they're not always going to line up because those 3 ETFs we looked at pretty much looked identical, right? So if you're looking to build a portfolio of gold or gold instruments, any one of those 3 ETFs could do the job from that perspective. But when you look at the stocks, you've got to factor in that stock-specific risk. Some will be performing better, some moving with the gold price, some not. And those two that you just showed, I mean, you know, looking at all-time highs versus not, what's your preference?
Yeah, right. I would like to say Evolution, but it looks a little bit choppy even for me. So I'd go with Northern Star on this one.
Yeah. Agreed.
Next stock.
Yep.
All right, next one
Agreed.
is DEG. Oh, you're surprised.
Yeah.
Well, normally you'd go for the more volatile
Yeah,
one. What's
right.
going
Yeah, I
on?
tricked
Did
you on that
have a special tea today or something?
I wanted to get in before you did.
Conservative tea. All right, De Grey Mining, DEG. Maybe this one's a bit more for you.
I like this one. Yeah. Look at that. It's just stormed out of that sideways pattern.
Yeah, look, it's had a massive gap broken out. Now, when stocks or markets break up like this, it's really interesting to see them make new highs. So it's often a good sign because once the stock's in blue sky, it's got nothing to sort of block it. We've got all of this blue sky though, haven't we? Picture.
It's bluish sky.
Yeah. So, I mean, but that's a beautiful sign, the fact that it's broken out of there, and a long way to go to that all-time high, unlike the other miners. So
the gap would be worrying you a little bit, surely, though.
Oh, but look, I wouldn't worry about it. I'd be like excited about it. And some people might sit there thinking, oh, I've missed it, but I don't think you have. I think just wait and see, because it may even pull back into that gap there and then turn around and then take off again. But there'll be plenty of opportunities on this one.
Yeah, well, that's the question. I mean, when you said missing the opportunity, depending on what hat you've got on, if you're looking at that from a long-term perspective, you're thinking, okay, now's the buying opportunity. It'd be the more short, medium-term player that we're thinking, oh, maybe it's time to wait. But then if you do wait, this might be the best price you're going to get. It could just be very volatile and take off again.
Could
be parabolic on
gold stocks, right?
Yeah.
Just
so
shake
sometimes
your
you're better off to get in and set the stop loss that you want.
Yeah.
Depending on whether you're short, medium, or long term.
Yeah, and I would even argue, understand the volatility that you're trading. If you're trading these kinds of stocks, regardless of short, medium, or long term, allow for that volatility and sometimes accept, hey, you might not get that best price, but it might be worth just getting into that stock anyway. Let's get into the next one.
Done.
Do this one.
All right, Sandfire Resources. Now, there's a reason why you asked me to look at this one, surely. Are you trying to set me up here?
Not at all. I've just given you a really good one. Gee,
this is a very good one. I do like it. Thank you for that. This is beautiful. It's come back to retest that momentum line there, and it's actually closing in the middle of this bar here. And you know, this is a monthly chart, so the month isn't over yet. Close to being over. So I wouldn't mind if it just closes around that midpoint there. If we have a look at the weekly chart to see what's going on, it looks like it's having these same types of consolidation patterns as we saw over here. So actually, I'll grab a different tool.
So what levels to watch out for caution?
For caution,
that's really the question.
Okay, yeah, that's a good point. Well, it's at blue sky at the moment. It's actually come back from blue sky. So let's have a look at this previous all-time high there. And it looks like it did find some resistance around that, July 2024. It's trading below it. So this is a little bit of a danger zone to me at the moment. I would like to see it close with conviction above that point before, I'd like to, take any trade on this one.
So you're not sitting on the fence. You're just saying if it does X, Y, Z and a strong rise up,
yes,
then that's a good one.
$10. Yeah, because I think that it could actually come back to retest this momentum line here, and then while it gets to this apex here, it might actually break up to the outside.
Okay, so if someone was holding it, depending on their rules, and their rules may or may not trigger, therefore use the rules, but if it went below this bar here in December, would you automatically just say out?
Yeah, if you were already in it, you probably would have been out around that, when it broke below that $10 level. But that's okay. If you're still holding on, I think it's still a good play. But agreed, if it breaks below that low of $9.
But I mean, this could just be a little, it might not be a strong pullback. That could just be a little pullback in price before it then just shoots
Just like
up,
it did
couldn't
before.
I mean, yeah.
Exactly.
It's definitely
okay.
a long-term uptrend, that's for sure.
Definitely.
Next stock?
Next one we have is Perseus Mining.
Don't look at me, Joe.
Now,
You have to see what's going on behind the scenes here.
You guys sure you were drinking orange juice?
I don't know about
Jiggly
that.
going on.
We shouldn't have shared that drink, Janine.
super, really good. Yep. Okay.
Now let's have a look. This one is also in a long-term uptrend. This is looking great. Ideally you would have liked to have gotten in around that $2 mark, so around these levels here.
Maybe it's going to come back now.
But it could
retest.
come back. It could come back there. We've got that momentum. It's gone a little bit parabolic on us. So,
It's
you
had
get
1, 2, 3, 4, 5, about 6 or 8 weeks just sideways, really.
around here.
No, just up there at the high.
Ah, right. Yes, exactly. Yeah. But it's still holding that that accelerated trend line.
Yeah, that's the interesting point, right? And I wanted to get your thoughts on that. Oftentimes you'll see stocks that when they do run real accelerated, they can find that basing out or I guess accumulative, distributive type period before they break down. But this one seems to be holding.
Yeah.
So from that perspective, could that just mean that it's ready for another leg up?
Definitely, absolutely, because that's like a spring being coiled very tightly around this area, that price action.
And there's still plenty of upside to the all-time high, isn't there?
Plenty of upside. You can see a lot of indecision here, opens and closes around the same point. So this could be setting up for a nice, springboard to the upside. I like it. I'm getting excited.
All right, fantastic.
Jeez, we couldn't get him off that one, could we?
Next stock.
Okay, GMG, Genesis Minerals now. Now look at that trend. Isn't that magic, But if you were looking at this one now, would you be looking to buy it?
For me, it's probably run a little bit too hard.
So yes or no?
No.
Okay. And looking at the all-time high, which is way up here, so it's still got plenty of upside. For somebody who's in it, you'd just be hanging on and just until you got an exit, but there's still 30-odd% to the all-time high.
Yeah.
And it really proves the point. I mean, this is a picture-perfect example when you look at that chart of how trends, when they unfold, the best part of the move or the most volatile move is always that, over halfway or 2/3 up. And often people think that the best move is right down the bottom, but that's the riskiest move. You see here, you can capture some fantastic returns on the way up, which might appear expensive to people. So
because it's really stretching up now, isn't it? Like, in terms of the ranges of these bars. And if we look at the monthly range so far, it's almost, 20-odd% up for the month, whereas we hadn't seen that sort of range until back here. I think it did some of the same sort of things here. It went up for 1, 2, 3, 4, 6 months up. We had this outside bar here, if I could just expand it up, where it went, there was a bit of indecision. It went down, but not for long enough. Very little amount of time it's been spending going down when it is pulling back. So yeah, interesting move.
It is. So would you trade this one now?
Not right now for me.
well, trade structure.
You're just setting me up to get agreement. We knew what I'd say, I
He's being
think.
cheeky today.
She just agrees with
But
me.
on that point, trade structure would be the most important, especially when they're running. It's right about getting that right to get that best trade or squeeze the most out of it. But anyway,
Okay.
next stock.
All right, next stock we have is CMM, Capricorn Metal. So this is a little bit of more of an illiquid one. We have
Gee,
to
look at
really
it,
zoom
beautiful.
out. That one has gone crazy. Ideally, I would have liked to have picked it up around here, around that $5 level. When it broke
Yeah, but not
above
now.
that. Not now. It's kind of like throwing a ball up in the air. You don't know when it's going to stop rising before it starts coming down again. And these are the last moves that you usually see on a trend. And this is a similar scenario as we saw back here with this. Was it Perseus Mining? That
It doesn't look like it's had that run though, this one.
it hasn't had that run exactly. So we're at this stage back here. So that's why that's what we're
you're
alluding
seeing
to.
an opportunity.
We're seeing an opportunity that you could actually break up to the upside. And if you would have picked it up, you would have been up around that 50% level. But blue sky at the moment. You can project some levels using technical analysis, but there's
But
better stocks out
a
there.
pullback after this run could be really nice, and then another move up.
Could be. Yep.
Fantastic. All right. Well, thanks for that, team. Now let's see what's happening this week on Talking Wealth. This week on Talking Wealth, Pedro and I discuss, is Star Entertainment the gamble of a lifetime?
The story is there, you know, all the fundamentals are pointing to a bit of a decline, and also the chart is pointing to a decline.
It's one of those situations that, you know, we spoke about earlier in other shows where you need to be on top of not only the technicals, but also what is happening behind with the company.
Discover how a fractional operator can save you time and help you refocus with Lloyd Thompson.
A lot of business owners that come to me are classic visionaries, really good with the big ideas, but for a lot of these folks, that stuff like putting in rhythms, dashboards, feedback loops, that's not what gives them energy. Being able to tap into someone who can help them with that so that they can then focus on other things is a huge benefit for these kind of business owners.
Ready to unlock lasting wealth? Learn how to scale your business with Saul Cohen.
The best time to think about getting into an investor mindset is the day you start your business, but the next best time is today.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth. If you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03 9290 9988. That's 03 9290 9988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Dion is asking our thoughts on AGL. The stock is trending up after coming out of a significant low in November 2021, and it is approaching the $12.50 resistance level, which could provide an entry if it can break and hold above this level. However, it previously traded sideways at this level for a considerable period, so I'm wondering if it would be best to wait for a break above $15 for a medium-term entry. All right, Pedro, AGL.
AGL, I do like the stock. You know, I'm pretty bullish on this one, but waiting for $15 sounds like a little bit of
We
a
were
stretch.
scratching our head and thinking, how did you get $15? I couldn't quite work that out, but I can see that $12 resistance level is standing out like the proverbial to me.
I thought you were going somewhere else then, but it is standing out a lot. But I do agree that $12.50 does look like a...
I wouldn't even say $12.50. I mean, I think,
a little bit
you know,
lower
it's like we said before, where do you draw the line in the sand? Do you take it right at the peak? Or do you look at where the closes have been? Do you look at where, you know, where do you draw the line? There are so many options for drawing these lines, and you've just locked it on, haven't you? I couldn't get it.
Yeah, no, you can go.
But, you know, I would say it's closer to 12 or 12.30 or wherever you've got it there. You don't want to split hairs. If the stock trades above this previous high in January and it closes really strongly above these levels, you're not going to be sitting there saying it's only 1 cent below, I'm going to wait till next week.
Exactly, that's right. And because at the end of the day, you have to think about why you're trading the stock. You're not doing an academic, thesis on it. You just want to make some money of it. So you got to.
Sure, Pedro.
Well, there is some people that do, but you know, for our viewers, I hope that you're putting that line in the sand and actually enacting on those rules. Because if you keep moving that line up and you keep overanalyzing, you're never going to take the trade. So it's about just taking the trade, and if you're wrong, just get out.
Yep. So looking at that $12.50 level. Are they on the mark with the idea of looking at an entry above $12.50? Is that the most significant level of resistance that the stock needs to get through? And looking at that chart as it's running to that level, does it look like it could present a nice opportunity?
I think it could present a nice opportunity soon, actually, before it gets to that level. And you could maybe look at taking some money off the table when it gets to that level, if you were a little bit more risk averse. But you know, if it's showing signs of a bullish run, and it has been on a nice bullish run, you can see higher peaks, higher troughs all the way along. I don't have a problem with just holding it. If you do find an entry soon, just hold it until it goes above that level. Yes, it is a previous level of resistance, but stocks often break through them and actually trade nicely above them.
Yeah, and there's no reason why, even if, as you said, getting in earlier and letting the stock see what it does at that, $12.50 level, at least you're giving yourself a buffer from your entry to that level to see what is going to happen, and give a little bit of room for it. If it's going to start to turn around, then hey, no one's holding a gun to your head saying you can't sell. You can always get out at the first sign something's wrong.
Exactly.
And wait for that opportunity above 12.50. Is there anything else you wanted to add on this stock, Janine?
Look, I was thinking that maybe $15 is more like a potential where it could run to, you know, rather than
Target.
waiting for it to get above there. But I think the reason for this question's been raised is because there is a fair amount of resistance around that level. But if you look at where we are in the scheme of things, then you'd have to say that, you know, there's around 20% upside to that zone there. Now, it could shoot through that on its next run up. It might stop there and have a serious pullback, but that's where just having some decent rules would give you the confidence to take the trade. So if you're unsure, then it could mean that you just need a bit of help, you know, in narrowing that down, which is what we do every day. We help people do that.
Yeah, fantastic advice. All right, we now have a text from Sumit. He says, "Hi Janine, Phil and Pedro, I would like your opinion on Zip. I just sold the stock in mid-December last year when it triggered my rules. I've been looking at it and I'm hoping to get in again if it closes above $3.50. Would appreciate your thoughts and Happy New Year." Thanks, Sumit. Happy New Year to you, Sumit. Also, Janine, Zip, a stock that, geez, during COVID, it was on everyone's lips, that and Afterpay.
Oh, yeah.
I know, I actually wondered what happened to it because no one was writing into it.
Yeah, well, it had a bit of a
it's
whoopsie, but it's back. It's back. What do you?
Yeah.
Above 350, is there another entry?
Yeah, look, I think so. Looking at it, it looks really nice, and looking at that horizontal line I'm just about to draw there, there's some definite potential in there. Could even go higher. There could be some range between around $5 and sort of $6.50, $7 at the moment, but it's still consolidating sideways. Looking at the weekly chart, there's no entry as yet, but the risk would be relatively low depending on where you take the entry. So there's probably, you know, if you took it there, then the risk is that it turns around, and you might consider what your stop loss should be. So having analysed the history to work that out, of course, but there's about 21% to the bottom. But if we get rid of that for a minute and we just have a look at, well, what if we sort of set something a bit more aggressive, but what would it need to do? So sometimes you just need to stack things up. There's a 15% there, but in a stock like this, you're probably not going to get in right at the entry. So we had a question earlier about being able to get in when the market opens on a Monday. Questions like that about, you know, black and white things like, what if I can't get in 1 cent above or 5 cents? What if it blows off and I end up being above 50 cents above the entry? Can I still buy it? Well, that's all a risk-reward decision that people will make with obviously the right skills and knowledge and a good trading plan. But to me, I think it looks quite good. But in saying that, these stocks can flip. So if it trades below this low here at 281, you know, I'd forget about it and just continue to watch it for a good opportunity. I'd actually prefer, to tell you the truth, you know, to talk completely frankly about this stock, Zip, given the way that it's unfolded in the past, because just because it's doing this nicely now, to be frank, look at that. It's just gone up like that, and then it's just traded sideways. It's had big reversals. You have to really look at the history of the stock and the personality of this thing to really understand.
And look how much the personality has changed.
Yeah, but it could go back to that. And that's the thing. So if you look at how it just trended beautifully up and then spent a long time going sideways, took off, and then down a long time sideways, it's done that throughout its whole history, even when it made a high and then traded sideways through here before trending down. We're seeing repeats of that. But this is actually a much better form, if you like, for a stock. But it could take out that low, given that it's done it before. So I'd just be watching really closely right now, because it's at that sort of precipice of either breaking up or breaking down, which is really exciting for these sort of stocks. Yeah.
Good advice. All right. Well, our next question is from Jimbo. What's the best way to manage a portfolio that increases in size each month based on being able to top it up with savings? My 3 options are: adjust my portfolio rules to allow an extra position, add to an existing position, sit on the extra cash until I close out one of my current positions. Now, at the moment, I've been adding my new positions as my rules trigger. However, I am concerned that I may end up with too many stocks to manage. Now, I'm going to go to Janine on this one because you're the portfolio construction master. But
I love that. Oh, the module that we did on portfolio construction. I was really all over that. Loved it to bits. But we have improved on that even more. So if you're up to that module, Don't blame me.
But I mean, it's an interesting question because there is funds coming from elsewhere, and there is that very real possibility that you do end up with too many stocks, given you're always getting capital in, looking to invest it somewhere. What of those three options would be the best way to go about it from your perspective? Or if
I'd say, look, all three of them are good. The best one, look, depending on how many stocks you've got, you could add another position. That would be an option. And it depends on the mix in the portfolio. Is it all higgledy-piggledy? Is the portfolio well balanced and has it been built properly? If not, then you might need to have a look at topping up positions. But I wouldn't top up something just because the value of it is down compared to other stocks. You might end up topping up something that's actually higher in value than other stocks, but it actually gives you reason for doing it. So, but it's all up to you as an individual to decide the best way, but it's all about risk. So remember that. If you buy an extra position, then your risk is being spread across more stocks. It's always a good way to go. If you top up a position, you're taking extra risk on that individual stock. So does it justify it? How does that affect the whole portfolio in doing that? Because at the end of the day, when you go to sell it, if it triggers a sell, you're going to be selling the whole position, more than likely, depending on the strategy you have. The third option was go to put it in cash, wasn't it?
Well, wait till you close your position and then buy a new one.
Buy a new one, which is fine. It's fine to have a bit of cash sitting there. Don't be nervous, Nelly, thinking I've got to put every bit of cash into the market. When you sell that stock, and eventually you will if you're trading more medium term, there are stocks turned over 6 to 9 to 12 to 18 months. Eventually you'll get a spot. And you may actually build up a decent amount of money to buy, a full position. Because sometimes people think I'll just put a part position into something small because they haven't got enough cash to do, and that could actually wipe out the profit from a good stock that, I've seen people do that before.
Well, I was going to mention that because if you're just topping up, let's say that topping up option, if you're just topping up a position just because you can, one, are you getting the best price that you can for that stock, or have you've already missed it initially?
Well, I don't mean dollar cost averaging, so let's scratch
even
that
as we're going
idea.
up. So even as we're going up, if you've already bought in the position and it's going in your favour and you're thinking, well, I've got some spare money lying around, I'm in profit, I might as well just lob it in there, even though it might not be the optimal time.
Well, you have to analyse it to make sure that there's still sufficient upside. It's almost like buying it for the first time again. You've got to look at it again and say, well, okay, is there still decent upside? Is there 20%, 40%? What's the upside potential over the medium term, and am I likely to hold it more short to medium term in accordance with whatever my strategy is?
Yeah, or is it presenting a new buying opportunity?
That's right.
But we do now have a text from Yas who says, hi guys, can you please look at URW breaking out of consolidation pattern and looks to be heading up around the $10 area? All right. Pedro.
Oh yes, I always like his stock picks. Actually, he's getting quite good. So let's get into the chart and have a look. URW, look at that. It's come off this low here. Back in 2020, it's tried to come up. It actually had that initial rebound, that initial reaction, if you will, and then it's come back down. Tried to retest that low again. It didn't quite make it. Consolidated a little bit around here on this little triangle pattern and actually broke out, and now it's forming this beautiful pattern here. We've got that resistance there around that $7 level, and it's actually closing on the high for the month. And look at this little tiny bar there just by itself, just gapped up. The volume isn't supporting it very much. That wouldn't be my only concern there, because usually you get a spike in volume coming out of these patterns to support that move up. You may get that the following week. You may get that maybe the week after. We may come back down and maybe fill this gap here. We have to see whether the stock does fill gaps. It probably doesn't, because this one, I doubt this one is going to get filled again. Same with this one back here. So I do like it. And this is a weekly bar though, so it looks like it's a little bit of an illiquid type stock, is it? We've got millions here, no, 717,000. It is a little bit illiquid, but I do like it. I think if it breaks above this this high, this $7, then we're looking good.
Good opportunity. All right, great stuff. Yes, now we do have an email from John who writes, I've been considering APE, Eagers Automotive. I'm not in it just yet, but it is showing a nice consistent upward trend. And I'm thinking about a potential entry at $12.53 for a short to medium term hold. Also, I've noticed in the latest run up, the volume seems to be declining. So do you think this is a concern, and are there other risks I should be keeping an eye on? All right, Janine, I like the idea that he's picked up falling volume on a move up.
Yeah,
Must be
great one, John. You know, that's the thing to watch for, because sometimes you can get into these stocks and it's been a false rally, you know, and it's a sucker's rally. So that's one thing to be really mindful of, because you've got accumulation and distribution going on at all times over a cycle of any stock or market. And, you know, we saw this sort of scenario happening where it wasn't going anywhere and eventually it fell away. But here it's different. It's in a trend. So that's one positive thing that to bear in mind. But it's about having a look at, well, how long does it tend to run for? I think it's got the potential to go back up to around $15. It's showing that at the moment, but there are still risks. So the reason it's slowing down, you don't have the volume, the telltale sign is to look at the chart. And I just, you know, look at that and thought straight away, we don't need to read why Eagers Automotive might be, you know, slowing down at this level. We can see it, you know, and that's gold, isn't it, really? Speaking of the topic. You know, but that's why you like charts. You know, that's why you're here on the show, to find out.
Yeah, and I would even add from 2020 to all the way to 21 and 2 that the volume was falling, but the stock was in that really nice upward trend. So be wary of the volume itself. But anyway, remember to show your support for our channel and smash that like button. Now, if you enjoy watching and want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Now, before we let you go, what was your favourite part of the show? Was it our hot stock tip, our topic for the night, or was it a viewer question? Let us know by commenting below, and thanks to all those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all that and more. Next week in our main topic, we get into the crypto ETF boom versus ASX small cap stocks. Where should you invest in 2025? Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. If you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you will always know when we go live and put up new content. As always, thanks for joining us for now. Goodbye, good luck, and good trading.